Alrighty guys, what is going up? Welcome back to the best investing money management channel on YouTube. I am your host Carter, and in today's video we are going to be talking about AMC again. Now, a lot of people have been asking me saying, Carter, is AMC back? We've seen a lot of buying pressure enter this over the past couple of days. Should I buy it? I want this thing to go to the moon. Should I buy it? Well, let's break down the chart and I'll give you guys kind of my opinion on it. So you guys can see we're looking at AMC. This is the weekly and the 3-year chart. Okay, so you guys can see the dotted line represents a year. So you guys can see we have a beautiful spike up. Really went from almost $1.90 all the way up to as high as you guys can see almost $100 a share, which is absolutely crazy. So if you would have bought 10 shares down in here for like $20, you could have sold them for over $1,000 per share, which it's absolutely crazy, right? So now a lot of people are saying, well, Carter, since it being $36, I should buy it because it can go back up to $100. Well, realistically, yes, it can because it's done it in the past, but you have to understand that the risk level for this thing to go back up to 100 means you guys are pretty much going to be risking $36. Okay, so the nearest support is here at around $8, a little bit here at 15. So you're really going to risk almost all of your money for this thing to go back up. It's not a solid investment, okay, or trade. But if you go to the 180-day mark, you guys can see it a little clearer here, what I mean. So you guys can see the highs here are absolutely crazy. But breaking this thing down, it has very strong resistance here at around $60. Okay, every time it comes in contact, we get a lot of selling pressure. Okay, that's why we've seen a lot of sell-off at that price target. And the thing about this is we are on a long-term upward trend, meaning that the chart for the year is going up, which is fantastic, right? You guys can see it hits this trend line almost every time and we get buying pressure. So that's where I think our move is for a swing trade. But I also think the general direction of the stock that it's going is down. I think the sellers are really in control of this stock. Now, with that being said, I think that yes, it could possibly go back up to $50 or even $60 or $70 a share, but also before then it could easily fall back down to $25, $20, $15. The volatility for this thing is really, really high, and I would recommend beginners or new traders take a little bit of don't go heavily into this. The reason why is because this is a more volatile stock. Looking at it at the 5-day chart, you guys can see it a little clearer. The past 5 days, we've just seen a lot of sell-off in this, right? We've really had a consolidation over the past 5 days, but look at the volatility, right? Lows here at 31, highs here at 46, back down to 36. So now let's go back and go to the 10-day chart so you guys can see it. General downward trend, right? So the general market and the general trend right now of this stock is headed down. And I know a lot of people are saying, well, Carter, you got to hold it for the moon. Yes, I think that there is an opportunity there, but I think the general census for this stock is high risk, high reward. And that's going to be the mindset that you have to have with it. And for me, I think there's better opportunity elsewhere. I would rather see you guys invest in a company like SOFI, a stock that's on support, right? You guys can see every time it's hit this support line here at $14, we've gotten buying pressure, buying pressure, buying pressure. So now we understand that that's a very strong support. You could set your stops at like $13, so you risk $1 for this thing to come back up to highs here at 24, risking $2 or $3 to make $10. I think that this would be an overall better swing trade, and Sophie is a better long-term opportunity because of the sector that they're in. They're heavily in fintech, which is the financial technology, and I think AMC there's too much competition. We've really. So over the past year, we've proven that you don't need to go to the movies to actually get new releases. You have Disney Plus, HBO, where now they can just say, hey, for $20, you can stay at home, pause it whenever you want, eat as much candy and popcorn as you want for $20. So now Do you think that's going to be helping out the movie theaters? Absolutely not. I still think there's an opportunity there, but AMC is way too overvalued for me for a long-term opportunity. And that's it. I hope you guys enjoyed it. I had to get that off my chest because I'm tired of seeing these AMC comments. So we'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.